your currency collapse and you watch your family get wiped out, then maybe you get it.
Hey guys, welcome back to Library of Wealth. Today we have Michael Saylor on the future of Bitcoin and the issues in the crypto industry today. He talks about the crash with Bitcoin and in the crypto market. Some would say Bitcoin is at a cyclical bottom. Today it's trading at less than half the all-time high, and with great uncertainties that remain in financial markets, as demonstrated by price actions across equities, it will be interesting to see how Bitcoin bounces back. Proponents of Bitcoin have endorsed the digital currency as an inflation hedge, in part because there is a finite amount of it, but Bitcoin has tumbled hard along with stocks. Saylor remains bullish despite market conditions, only this time it's combined with record highs in inflation and the market as a whole. Money all over the world is losing up to 40% of its value now, and the only reason there is no panic in the US is because the CPI is being manipulated to create the lowest possible inflation number. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I think now we're staring at this paradigm shift of digital energy. And why would I want to move a block of $1 billion of something from point A to point B through cyberspace in a split second with instant final settlement, right? Initially, if you roll the clock back a decade, we didn't have it. Every financial crisis we've had, right, in the history of the world, and we've had 10,000 of them. There have been 10,000 currency collapses. You've got an entire world, media, analysts, politicians, financiers, and they're all starting to figure this out. But I still say we're early, right? This paradigm shift takes a decade. And maybe the first decade was the embers of a flame flickering from 2009 to 2020. And then from 2020, we started pouring gasoline on that flame, right? The gasoline in the US is we triple the inflation rate, triple it, monetary inflation. But forget about that. Maybe you're a blue blood living on the Upper East Side with a trust fund and you just don't see why you need it. The gasoline in Sri Lanka is everybody lost everything overnight. The gasoline in Lebanon is the bank freezes their doors and you lose all your money. The gasoline in Argentina is the peso goes from 20 pesos to the dollar to 280 pesos to the dollar in 4 years, right? The gasoline in Ukraine is oops, there's a war, banks are, there's a limit to how much money you can withdraw. And the gasoline in Russia is, okay, I get, the stuff you thought you owned in Europe, you don't own that anymore. We're taking that from you, taking your gold, taking your bonds, taking your yachts, taking your villas. So there's a lot of people with a 2x4 to the head, and they're all stunned, and they're all trying to figure it out. And there's this colorful debate, a political debate, a media debate, a debate on YouTube, a debate on Twitter. What's the solution? And the only thing we can all agree on is we probably need to look at some new ideas because the old ideas just don't work anymore. And there's no intellectually honest person that would say, yeah, everything I believed in 2019 or 2018, it's all still true. I haven't changed any of my opinions about anything. I mean, everybody's had a place in their life where they've been jarred and stunned, and now they're trying to make sense of it.
It's not just crypto markets that are feeling the burn right now, it's stocks across the board. Saylor believes that even inflation won't stop the collapse in currencies, but it could definitely affect short-term trading in the crypto market. Buying the dip benefits not just those who are most invested in Bitcoin, but it also helps with further distribution by attracting new entrants, which is a good thing.
From the Lydians to the Athenians to the Spartans to the Romans to the Venetians, to the Brits multiple times, to the Carthaginians, you could just go on, and the Persians, and go on and on and on and on. And the history is full of examples of an empire rises, someone mints a currency, the successors or the children of the conqueror debase the currency, the grandchildren debase it more, the great-grandchildren forget how they actually got the power, they spend everything, go wacky crazy, pretty soon the economy collapses. You can't pay your soldiers. They all defect. And the barbarians come over the gate and they take everything, including your debased gold. They melt it down, they purify it, they mint their own coin, and the cycle starts again. That's literally taken place 10,000 times. You know, when von Schliemann dug up ancient Troy, he dug up like 19 ancient Troys. He found 19 cities buried under each city. Everybody said, good place to build a city. They would build it. They would rise over a couple hundred years. They would crash and burn. 200 years would go by. Someone else comes along and says, wow, good place to build a city. We do it again. We do it again. We do it again. That's the history of money. And that's the history of economics. January 3rd, 2009, we launched this little monetary virus or this idea virus. And it kind of burns very, very low level for a while, and people aren't sure of it. It's a gimmicky thing, and it gets bigger and bigger and bigger, and we're waiting for, well, why would you need it? And, you know, you had to be a visionary to kind of need it or get it. If you lived in Argentina and your currency collapsed, and you remember the currency collapsing, or if you lived in North Korea, or if you lived in Africa and your currency collapsed, and you watch your family get wiped out, then maybe you get it. But, you know, that wasn't the mainstream, right? The Western world is not run by people that lost their family's life savings in Africa or South America. So it was an interesting idea, but it was a fringe idea until 2020. And in 2020, the monetary inflation rate tripled in the US. And what we saw was, in the world's best economies, you're losing 15 to 20% of your economic value in the currency every year. In the second-tier economies, you're losing 30% or more. Like the Japanese yen is down 24% against the dollar in the last 12 months, right? And in the tertiary economies, you're losing 50, 60, 70% of the value in the currency. And that's where you get a Sri Lanka, where literally the entire government collapses, or what you're seeing going on in Africa and Zimbabwe right now, or famously in Lebanon, where people have been breaking into banks, taking people hostage to get their own money back, right? The bank robbers are robbing banks, and their demand is, give me my own money back, because the government stole the money and the banks froze it, devalued it, and they're going to give it back to you over the next 17 years, devaluing it 20% a year while they trickle it out to you. So here we are. We're in this great reset, if you will. People are questioning currency. They're questioning their political thoughts. They're questioning stores of value. And every conventional model, the 60-40 bond model, it's broken. Bonds, for example, are down 20% in the same year where stocks are down 20%. Okay, so that never happened for 20 years. So why does that happen? Because when you drive interest rates to zero, if you can't drive interest rates negative, then there's no way to get bonds to go up. Highlight of the year? The highlight of the year is people were stunned from March of 2020 to March of 2021. And from March of 21 through the middle of 2022, they're all starting to get their bearings, and they're like, well, I guess, what is Bitcoin, a digital commodity? Do I have to deal with that? Well, now Fidelity's talking about rolling out the 34 million retail accounts. You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC getting educated on it. You know, big institutional investors starting to take Bitcoin positions. You know, the media. Now you've got Bloomberg covering crypto.
Saylor notes that we've been in a recession since 2020, and the economy has lost 40% of its purchasing power in the last 2 years. Even though the dollar is the most powerful medium exchange in the world, currencies are the weakest store of value. Because fiat currencies are collapsing, most people don't want to hold on to a local currency. Saylor advises to keep money in the dollar in the short term, but in the long term invest it in Bitcoin because it's the most reliable property on the market. What do you guys think about Michael Saylor's opinion on the importance of time horizons and where Bitcoin is headed this year? Let us know in the comments down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.